Welcome to Frazier Deeter's Culture of Compliance podcast series, where we discuss compliance as a competitive advantage in today's marketplace. I'm Sabrina Serafin, partner and national leader of Frazier Deeter's process, risk, and governance practice. Today we're talking to Shelby Nelson, a director in our department who specializes in system and organization control, or SOC reports. Shelby serves as a SOC subject matter expert for Frazier Deeter. She's also a frequent speaker at professional organization events on the topic of SOC examinations. She's also a SOC instructor for the AICPA, and in addition to her CISA and CISSP designations, Shelby has received both the Cybersecurity Risk Management, or CyberSOC, and Advanced SOC for Service Organization certificates, both from the AICPA. Welcome to the podcast, Shelby.
Thank you, Sabrina.
Today we're focusing on the basics and the advantages of going through a SOC examination. Shelby, who developed the requirements for a SOC examination, and how did this all come about?
That's a great question, Sabrina, and I get asked this quite a bit. As far back as 1992, the AICPA issued SAS 70. The original intent of the SAS 70 was for service organizations to issue reports for other organizations that relied on their services as they pertained to their financial statements. So the idea was to allow internal auditors or external auditors to obtain the SAS 70 report from their service organizations and be able to place reliance on those controls as it pertained to line items in their financial statements. Over time, the use of the SAS 70 and the content thereof morphed. There's a couple reasons that changed. One is the increasing reliance on technology. And so service organizations were putting more and more IT-type controls in their SAS 70 reports. And that was never the AICPA's intent. And then with the advent of SOX, Sarbanes-Oxley, there was an increased need for reliance on and documentation of controls by an independent auditor for the purpose of SOX. So with all of these changes and pressures and the misuse of the SAS 70, the AICPA took this under advisement, and lo and behold, they issued SSAE 16, which was the standard on attestation engagements that, in a sense, put guardrails around what you could and could not put in what was the SAS 70 report. And now they've been referred to as a SOC 1, or Service Organization Control Report. There was continued pressure for what to do with these IT-type controls and how do those get reported and treated. So the AICPA went back to the drawing board and did a clarified version of the attestation standards, which resulted in SSAE 18. Now, there's a bit of a confusion between SSAE 18 and SOC 2. They are not the same, and SSAE 18 does not equal SOC 2. SSAE 18 is the guidelines and the standard by which we perform an attestation engagement, whereas the SOC 2 and the SOC 2 guidelines is the framework by which we test and what we include as far as the common criteria and the additional criteria in a SOC 2 report. The AICPA has also given us guidance in addition to the SOC 2 for another report called a SOC 3 report.
Okay, that's a lot. And you've mentioned a SOC 1, a SOC 2, a SOC 3. Can you discuss the differences between those three reports?
That's another great question, and despite the length of time that these reports have been out, there is still some confusion around the differences among the three. So let me just give you the highlights. A SOC 1 is an examination of controls for a service organization relevant to their internal controls over financial reporting. So the way I think about it is a SOC 1 is for financial reporting, and a SOC 2, in its simplest terms, is for IT. A SOC 2 report must cover the trust service categories and the criteria. There are 5 of them: the security, availability, confidentiality, processing integrity, and privacy categories can be included in a SOC 2. The security category is the required category that has to be included in every SOC 2. The other 4 are called additional criteria because they're just that. additional and can be added at a service organization's discretion. And then lastly, a SOC 3 report is essentially a SOC 2. However, the primary difference is a SOC 3 report is for general use. In other words, a service organization can publish a SOC 3 in its entirety on their website, whereas with a SOC 2, there is restricted language within the report that gives service organizations guidance as to whom they may share that report with. A SOC 3 report also does not contain Section 4 of a SOC 2 report, which Section 4 are the service organization's controls and the service auditor's tests of those controls and results of those tests. There's also a new report that has recently been given some attention and guidance from the AICPA, and that's called a SOC for Cybersecurity. And as you mentioned earlier, Sabrina, I have the certification for the SOC for Cyber examination, and what that is that report is specifically for an examination of a service organization's cybersecurity risk management program. So it contains elements of the criteria that we would include in a SOC 2, but it is specifically focused around cybersecurity risk management. Lastly, the AICPA is in the works to introduce a SOC for vendor supply chains in 2019. There was a white paper exposure draft, I believe it was in February, but we still haven't seen the results of that guidance yet. So stay tuned.
Okay, Shelby, there are different SOC 1 and SOC 2 reports known as types.
So that's right. If it weren't confusing enough, now we have different types of SOC 1 and SOC 2 reports. So a SOC 1 can be a Type 1 or a Type 2, and a SOC 2 report can also be a Type 1 and Type 2. The difference between a Type 1 and Type 2 is that a Type 1 examination is as of a point in time. So you will see on a title page of a SOC 1 Type 1 report an as of date, which essentially means that the service auditor performed their procedures, and as of January 15th of 2019, the controls for that service organization and their design were appropriate and implemented. Whereas a Type 2 report includes not only a service organization's control design, but the effectiveness of those controls. And effectiveness must be tested over a period of time. So you will identify a Type 2 report by seeing on the title page, or perhaps within the service auditor's opinion, that the controls operated effectively throughout a period, for example, January 1st, 2019 through December 31st, 2019.
Okay, thanks for that explanation. Now, why are we here? What are the competitive advantages of performing an examination? Is a SOC examination a requirement for public or private companies?
So that's a great question. So let me first address the competitive advantage question. SOC reports are not a required examination. They are at a service organization's discretion. So because they are at a service organization's discretion and not mandatory, whereas like for public companies, you must go through and adhere to Sarbanes-Oxley. With a SOC report, the service organization is taking internal control and the reporting thereof very seriously. And a lot of times we will see clients choosing one organization over another simply because they have a SOC report. And they are being transparent about their internal control environment, be it for financial reporting or for their IT control structure. There is no AICPA requirement that an entity must undergo a SOC examination. However, we are seeing clients and other service organizations making this a requirement of business. We are seeing this in contractual agreements that entities must issue a SOC 2 examination, and taking it a step further, we're now seeing entities being required not only to do a SOC 2, but a SOC 2 Type 2 that includes specific criteria, so maybe more than just the security criteria.
So now for the most important question of the day. What are the first steps an organization should take if they are either required by a client or interested in going through a SOC examination themselves?
So the first steps an organization should take if they're interested in undergoing a SOC examination is to first perform kind of a self-assessment. Take a look at their maturity of their internal control environment, and is the goal a SOC 1 or SOC 2? Because that's obviously very important. If they're considering a SOC 1 exam, then those internal controls need to be over their financial reporting, and conversely a SOC 2 over their IT internal control framework. The second thing that an entity could consider is, are they subject to any other additional frameworks such as HIPAA, ISO, HITRUST? Those existing frameworks translate into SOC language, if you will, and can make achieving and undergoing a SOC examination much simpler. At Frazier Deeter, we take a lot of time in understanding a service organization's internal control environment, determining which trust categories are the most appropriate based on their needs or their contractual requirements. We perform readiness assessments to make sure service organizations are ready for the exam, because the last thing we want to do is start an examination and not have a full understanding of their controls or how they evidence those controls from functioning. We also take time to educate our clients on all things SOC, so they have all the information they need to make the right decision for their organization.
Well, Shelby, thank you so much for taking time today to explain the concept of SOC reporting, its history, advantages, and requirements. You've given our listeners valuable points and next steps to consider as they evaluate their SOC examination needs. Thank you for listening to Frazier Deeter's Culture of Compliance podcast. Please join us for our next episode as we continue to discuss transforming compliance requirements into investments in your business.
Thanks for listening to one of Frazier & Deeter's branded podcasts. To learn more, connect with us on LinkedIn or visit us at FrazierDeeter.com, and be sure to subscribe so you never miss an episode.